Everyone for joining today's webinar for Memphasys. So I'm David Tasker and I'll be hosting today's webinar. This is a business that is clearly moving into a new phase. We're now seeing the shift from validation, regulatory milestones, into commercial rollout, revenue generation, and scaling a recurring revenue model globally. Today's session is about unpacking what that looks like in practice. I'm joined by Marjan Mikel, Director of Memphasys and Chair of the Commercialisation Committee. Marjan has been closely involved in driving the company's commercial strategy and global rollout. And today, he'll take you through progress across key markets, early revenue traction and what's driving it, the commercial model and how it scales, and what's been achieved to date, and importantly for investors, what comes next. Then we'll move into a live Q&A, so please submit your questions throughout using the Q&A button on the screen, and I will put those questions to Marjan at the end of his presentation. Marjan, we look forward to hearing your presentation. Over to you.
Thank you very much, David, and good morning, ladies and gentlemen. Thank you very much for joining us today, and I hope to be able to impart a little more information around what it is we've achieved over the last 6 to 8 months. And I might start by saying no one's ever doubted that we have a wonderful technology in the Felix device, and importantly, a recurring revenue stream built around the cartridges. No one's ever doubted that. We've known that from day one. What has changed significantly is the board's refresh of strategy that we made very public in around about September, October of last year, and how we were going to focus solely and wholly on the commercialization of the wonderful asset that Felix provides to ourselves as an organization, but also very importantly to the IVF clinics around the globe. We have remained very doggedly focused on executing against that, and the organization you see today is not necessary. It has come such a long way in the last 6 months, and I'm going to remind people of the advancements and the achievements we've made over that period of time. And I look forward to answering any questions we've got at the end of the session. Next, please. And again, as I said, there has not been a significant improvement or advancement in IVF technologies in the andrology space for over 40 years. Felix has provided the first true breakthrough in this space, and really does provide some significant advantages to what's currently available to clinicians in the IVF space to improve not just the clinical outcomes, but also their workflows. Now, I've spoken about this many times, a 6-minute processing time versus up to an hour. It's been clinically validated. It's really important to note that this Felix device has been researched and developed for well over 10 years, and clinically so. There are some superior results that we get versus current processes such as DGC, which is density gradient centrifuging. And we find that those things come together to really provide us with a very compelling story when it comes to the commercial rollout and acceptance of Felix across the globe. We've got contracts in the last 6 months in Europe, in MENA, that's Middle East, North Africa. We continue to generate sales in Japan with this new strategy, and we are very advanced in discussions in Australia as well. So we have made some significant progress, and importantly, we are getting repeat orders from existing clients with the cartridges, which is where our business model is built on. Next, please. I'm really pleased with, this is probably my favorite slide. For the first time ever, this current quarter, we will break in excess of $100,000 in revenues for Felix across multiple jurisdictions: Japan, Italy and Europe, MENA, Qatar, Egypt, a number of other smaller markets. And important to note that 2 of those areas, that's Japan and MENA, have already put in repeat orders. So we are getting involved in the workflows of these organizations, and it's really important for everyone to understand that our business model is not selling a device. Our business model is selling a new sperm separation technique that requires a Felix cartridge to be used every single time a IVF or ICSI cycle is conducted. So it is a recurring revenue stream that will continue to generate revenues within those IVF clinics that we have got contracts with, because typically they will be doing in excess of 1,000 cycles a year, and we will take up the great majority of those that are being allocated to ICSI. I'll get into a little more detail around that as we move forward, but importantly, our technology, our strategy that is focused heavily on commercializing Felix and Felix alone at this moment in time is being well accepted across multiple jurisdictions across the globe. It's a global opportunity, recurring revenue stream with repeat orders already. Now, it is important to note that our primary focus and priority moving forward is the 1 million cycles that the European market generates on an annual basis for IVF cycles. So Europe, MENA, which is also a large market that is linked to CE mark, which I'll talk to in a moment, are where our growth profiles are going to come from. And we have some exciting late stage discussions that we're involved in here in Australia and New Zealand as well. So we are no longer an R&D organization and haven't been for some time now. For the first time ever, Memphasys is generating significant revenues, as you can see, over $111,000 in revenues. That has never been generated by this organization in the past. We made this commitment as a board in September and October, along with a whole heap of other aspects of the business plan that we said we'd execute. And to date, we have executed everything we said we would do. And I'll get into a little more of those details as we head through this presentation. Next, please. It's been a long time coming, but fundamentally, as I said, no one has ever doubted the technology or the validity of the Felix solution. No doubt about that whatsoever. Now, pre-2023, a lot of time and effort was spent into making sure that we got the technology right and the technology worked. And it worked in a way that fed into the way that IVF clinics actually operated. Now, that's really important because part of our strategy is now to make sure that we have a go direct strategy, either ourselves or through partners, to really understand what the workflows are within an organization, an IVF organization, and to make sure that we are aligned around those workflows and see how we might be able to improve them. We had initial sales in 23-24. 25 was a breakout year for us. CE mark was granted. We said we'd get that in September of last year, and we get that by the first quarter of this year. We got it in December, so ahead of schedule. The Monash phase 3 study was completed. We've got our first significant contracts, the ITL contract for MENA at $325,000 as a contracted arrangement between the organizations was completed, as was the contract with CFA Italia, which is almost $1 million in contracted sales over a 3-year period. So these are things that we have delivered on already. And as I said, we are this year demonstrating that these clients and these contracts are real because we are getting repeat orders. Our footprint, for instance, in Europe and in MENA are growing across numerous countries, and we're getting repeat orders. In 2026, we also secured TGA approval, which means we can now sell in Australia. That was the first step in making sure that we can move to the next stage of negotiations with a number of clients that we have in this particular part of the world. There'll be more to come there, but we are very pleased with the state of discussions. And I want to make sure that we don't repeat some of the contractual mistakes that were made by ourselves in the past, and make sure that we've got a contract with our potential client that is satisfactory to both parties, and make sure that both parties have obligations to that contract to make sure that patients are getting the best possible use out of the Felix device. So moving forward, India is next on our schedule with the CDSCO, which is sort of their regulatory approval, which we anticipate happening in about July this year. We are continuing to grow and scale the European, MENA, and Asia Pacific operations and contracts, and we've already made some significant progress in those areas, and anticipate a number of other contracts being finalized over the next month or two. So that's really important. We are looking at expanding our reseller relationships across the globe. Important to note, we will not be entering into a traditional distribution model with Felix. What that means is Felix is a breakthrough technology, and as such must be sold directly to the IVF clinics so they understand how Felix works and what the added advantages and competitive advantages and benefits of the product has to offer IVF clinics. You just can't put it on a catalog and expect it to sell itself. So we have some very stringent criteria that we are undertaking with anyone who wants to be a reseller of ours in markets where we're not going direct ourselves. And I can tell you already, we have walked away from a number of deals because we did not meet the criteria that we have put in place for someone to be a preferred reseller for Felix in any particular jurisdiction across the globe. Next, please. I wish I could say I was a rocket scientist, but I'm not. Certainly not heading to the moon or anything like that, which is quite topical at the moment. But fundamentally, what I said previously stands very, very steadfast, and that is Felix is a breakthrough technology, the first in 40 years in IVF in the andrology space and sperm separation. And you can't simply add it to a catalog of 50,000 other products and expect clinicians to buy it. You've got to go direct, you've got to educate, you've got to engage, and you've got to support. And this is part and parcel of what it is we've done as a significant strategic shift from what was happening previously. On top of that, our only focus at the moment is Felix. We have some wonderful assets in the background, but for now, we have the focus, the resource, and the people to be able to deliver on the commercialization of Felix and Felix alone. As I said, the results speak for themselves. We promised we'd get some multi-year contracts. We've currently got about $2 million in contracted sales, and I promised about 2.5 by the end of this financial year, and we will get there. Italy's a good example. Qatar, repeat sales already, dealing with one of their largest IVF groups, and they are already using Felix as part and parcel of the way they operate. We are looking at a step change in the revenues that we're generating. You saw the graph, $111,000 in sales this quarter with March. Next quarter will be even more as we continue to close off deals in the Asia Pacific area and Australia, New Zealand. So we are no longer an R&D company. We are wholly and solely focused on commercializations, as the board said it would be doing in September and October last year. Remembering it's just turned April. So everything we're seeing here has happened in about 6 months. Next, please. This is just to remind everyone that the issue of infertility isn't going anywhere, unfortunately. Humans are going to require assistance when it comes to IVF, helping them have babies. And this market is forecast to continue to grow significantly over the next 10 years. So there is no shortage of opportunity and no shortage of cycles. And I'll just reinforce, once we have a client and once we are in that client's workflows, we have a client for life, and we have a client who will continue to generate recurring revenues with the use of the cartridges for every cycle they conduct. Every cycle is more revenue for us. Next, please. Now, as I said, the technology is breakthrough. It is very sexy to clinicians, and it's very, very simple to sell, and I'll show you why I think so. Forget about the science at the moment, but we go through a process to help people understand how electrophoresis works in the area of sperm separation. So we go through a lot of details here, but fundamentally, next please. When we compare it to DGC and or swimmer, very complicated on the left-hand side of your screen. I'm not going to go through all the details in this particular slide, but there are significantly sexy and appealing advantages that Felix offers to our clients that are very easy for them to see the benefits of. Some of them operational, some of them financial, some of them simplicity, some of them around the fact that we are clinically and deliver improved embryo utilization rates compared to what they're currently using. And we're easy, fast, and simple. Now, I had the opportunity of holding me, of all people, a demonstration in the UK just a few months ago. And I can tell you how complicated I got into this and how easy it was for people to understand, even someone like me being able to show them how to use the device. Next slide, please. This is how easy it is. This is the complexity of using Felix. A pipette, 4 mil, 4 mil, 1 mil, sperm, press button. That's it. And I continuously had embryologists asking me when they finished, got the sperm sample out, looked at it under a microscope saying, and now what? Now what do I do? And I'd have to say, well, now that's it. Now you can either do another sample or you can go do your ICSI. They could not get it through their heads how simple this process was, how short it was, and how easy it was. And the validation work that this potential client did on these samples showed that the Felix device delivered high quality numbers of sperm that they could use in ICSI. It really is that easy. It's one of the funnest products I've ever had to sell in my life. And this is coming from a bloke who knows nothing about IVF science whatsoever. Yet I could work with the embryologist to help them do this myself. That's really important to know. Someone as dumb as me could do this with limited experience. That's how easy it is. And get quality results. Next, please. So really, if I strip the science out of this is real simple. It takes 6 minutes. Remember, 4 mil, 4 mil, 1 mil sperm press button. That's it. That's the process. They love it. They get addicted to it. It's standardized. It doesn't matter who does it. You're going to get the same result. It's reproducible. Because it's so simple and so quick, we can improve efficiencies in the lab and improve throughput, which is important for them because the more ICSIs they do in a day, the more money they make and the more babies they create. It's easy. Integrating it into standard operating procedures is not a very difficult thing to do. Once they get addicted to the 6 minutes and the quality of service we get, the rest is pretty easy. And as I said, there is no doubt that Felix delivers better clinical outcomes compared to DGC when it comes to embryo utilization. And that is so important to IVF clinics. It is such a compelling value proposition, and it's so easy to get people to agree. And I can tell you, N now equals about 20. We have yet to have an IVF clinic say to us, we don't like it and we don't want it. Not one. N's only 20, and it's only 6 months into our new strategy. but everything is heading in the right direction. And testament to that is the repeat sales and the revenue graph that you saw about 2 minutes ago. This is really exciting for us, and it is a global phenomenon. Europe, MENA, Australia, India, Japan, everybody is finding the rationale to adopt Felix as compelling, regardless of where they are on the globe, which is great. Next, please. Regulatory approvals is now not an inhibitor. We're approved everywhere that we want to be. And together, these markets equate to over 2 million cycles in a year. That's how big the area is. So there is no shortage of opportunity for us. I reinforce again that Europe remains a key priority for us. And the reason for that, there's 1 million cycles conducted in Europe every year. And we're only just scratching the surface. And the response we're getting from potential clients in Europe on the back of closing off the Italian opportunity, a customer that we have in CFA, is very exciting. And we have a lot of interested parties, and I'm looking forward to keeping all of you abreast of the new contracts as they come through. So everything, most of the globe, are opportunities for us right now. Next, please. These opportunities have manifest as contracts. We've got contracts in Europe where we now have CE. Now, remembering, we only got CE just before Christmas and we've already got contracts. Like, I've been in this game for a long time. To be able to secure contracts prior to a CE mark approval or soon after is quite a remarkable achievement, particularly when that contract's worth almost $1 million Australian dollars. So, and I can tell you that we're in advanced discussions with a number of other potential clients that I hope to be letting you all know about in the not too distant future. And CFA Italia are in the process now of finalizing a expansion program with some of the other IVF clinics they have agreements with in southern Italy, and we'll be rolling out a potential workshop with them in May. So I'm really looking forward to using that as a potential expansion of our footprint in Italy. MENA, which is the Middle East, North Africa, continues to grow. We already have significant second orders and repeat orders from our partners ITL. We've got our Hamad Medical Center in Qatar clinically adopting Felix and have already put in repeat orders. So that's really important to note. The footprint of ITL has increased to about 6 countries across the Middle East at the moment and will continue to grow. There are some markets where we can sell immediately on the back of CE mark. Qatar is one of those. There are others like Egypt that we need to go through a regulatory approval process, a little bit like we did with TGA here in Australia on the back of CE mark. So these other markets will come onto our commercial sphere in the next 3 to 6 months. And it's important to note that we are already working with some significant suppliers of IVF services in those markets to get them acclimatized to and used to the Felix technology, in readiness to purchase product as soon as it is registered in those marketplaces. Japan, it's important to note Japan's not a priority for us at the moment, given everything else that's going on, but we continue to get repeat orders and we continue to go direct with the clients that we've got. And one of those is now Colbert. We're also evaluating the reimbursement side, or the pre-reimbursement, the AAMC reimbursement in Japan, for us to open up a broader array of opportunity in the Japanese market. Now, at the moment, the product can be sold because it's not a highly regulated market, so you don't need regulatory approvals. And there is a reasonably large size private market that doesn't require reimbursement in Japan. So we anticipate that continuing to click over. We are working with some of the Japanese clients over there, one of whom's completed a Felix study comparing it to other technologies that we hope to use the results of to be able to get a reimbursement submission put into the Japanese authorities over the next 6 months. But as I said, please stay focused on columns 1 and 2 on the left-hand side, because that's where the game is going to be won for the organization moving forward. India, we've already got a partner in India, and we're already talking to a number of other opportunities that may exist there. So there is a contract in place. It's about $100,000 in revenues, and we know that we are going to get some more interested parties across the line with contracts in that part of the world as well. And as I said, I can't go into too many details in ANZ at the moment, but there are 2 significant contracts we are working on in the Australia-New Zealand area that I hope to be able to announce to the marketplace in the not too distant future. We just want to make sure that these contracts are absolutely correct and meet the needs, not just of our client, but of us as well. They need to commit to do things to us and give us minimum order requirements and obligations for us to get in any sort of relationship with anyone. So we're not going to go down a path where we aren't going to demand those sorts of quid pro quo and scenarios in our contracts. We're required to do a lot of things. Our clients are going to be required to do and deliver certain things to us as well. Thank you. Next. Just a reminder, it is a recurring revenue model, and each clinic, and you'll see that from the contracts we've currently got, will generate somewhere between $100,000 and $300,000 per annum, depending on the size of the clinic. All that matters from our revenue stream is the recurring revenues associated with the cartridges. Nothing else matters. We need to be embedded into the standard operating procedures of our IVF clinics, because once that happens, once they've signed a contract, we are not going anywhere. It's an accretive business model. $100,000 contract this month. If I get another $100,000 contract next month, that's $200,000 in revenues. Another $500,000 contract, that is now $700,000 in the recurring revenues. That's the way this model works. That's what makes our business model and strategy so attractive. Every client is accretive. Next, please. We're also currently working on making sure that we get our unit economics absolutely right. Our target is to get COGS to below 40 Australian dollars. And we are working with partners at the moment to see how we can achieve that. And I'm very confident of being able to do that in the next 12 months. Now, with the pricing range of somewhere between, the target price range is somewhere between $80 and $150 per cartridge, we are very confident and comfortable that we will be achieving about a 60% gross margin on the recurring revenue stream, which is industry standard. So that's comparing to ResMed or Cochlear or anybody else. So these are the sorts of numbers that I know that we'll be able to generate when it comes to the COGS margins on the Felix cartridges. So we're well advanced in that and working very closely with our partners. I've spoken about the economics of each clinic, somewhere between 100 and 300,000 in revenues. If we take an average of 200, for every 10 clinics we sign, it's $2 million in annual revenues. Every clinic, 200 grand on average, let's say, 10 clinics, $2 million. There are 2,800 clinics in Europe. We have one of them. So the opportunity is huge. And as I said, it's accretive revenue. And very importantly, our strategy is to engage with the clients so they understand why they should have Felix as part of the way they operate. It's all coming together very nicely. Next, please. We're not going to get into distributor agreements. I've spoken about this previously. We are not getting into bed with people who have a catalog of IVF products and want to add Felix to that catalog, because guess how many we're going to sell if we go down that path? As many as we did previously, and that's not much. We have to have a partner who understands this is a breakthrough technology, a recurring revenue stream, and we need to engage with our clients or their clients, IVF clients, to sell them on the benefits of what Felix can do that they can't currently get with their current approaches. Our reselling partners need to agree to a minimum commitment around how much they're going to order in a year. It's not how long's a piece of string, and trust me, those days are done. And I think our contracts to date speak to that. We get into a contract with an IVF clinic or with a reseller, they must commit to delivering for us as well. That's a big change for the organization. We need to make sure that we've got partners who understand that we need Felix to become part of the standard operating procedures when it comes to the andrology and sperm separation and the overall IVF process of our clients. Because once that happens, we aren't going anywhere. A very, very profitable and lucrative business model. Next, please. I'll end on this and say there is a lot that we've done. There is a lot more that I know we will be achieving over the next 6 months. I will be announcing over the next 6 months significant contracts in the European, MENA and APAC markets as we continue to scale our presence there. Sorry. We are in the process of finalising commercialisation agreements in Australia and New Zealand. And as I said, I want them to be right before we sign anything. So I'm very excited about where we're going to be with those in the next month or so. Indian regulatory, I've made this clear. Next 6 months. We're working on improving COGS. We're expanding our reseller footprint, but only on terms that we're happy with, that locks in our reselling partners as a partner, and as a partner, they need to do things for us. And I want you to remember, we are built on recurring revenue streams. Every new client is more business. Everything we said we would do during our strategic reshift and announced to the market in September and October last year, only 6 months ago, we've delivered on, and we will continue to deliver on our plans moving forward. So with that, thank you very much. David, I'm very open to answer any questions that may be posed to us.
Thanks, Marjan. A very clear overview. We have had a number of questions come through already, so I'll start with those. I'm going to try and group as many of the questions together rather than just repeating them over and over again. And if you do have any questions, please let me know. So you've talked about clinics using day-to-day. How should investors think about revenue progression from here? Is that the start of more consistent trend, or should we still expect variability at this stage?
There are two. One of the KPIs we will be introducing to the organization at some point in the not too distant future is the difference between, we'll measure the difference between our supply of the contract, which we typically today, how we recognize revenue is we ship, to keep costs down, a quarter's worth of cartridges at any one time. Now, once we ship those and invoice those, we recognize that as revenue as an organization, which is cool, right? Now, what I'm equally as interested in is to get a regular understanding of the number of cycles that Felix is actually being used in the real world. We need to translate the supply with the demand that the cycles that we're delivering on are being delivered. So there will be bumps in revenues, but they will smooth out as we go through the process. So typically, for instance, with CFA, no, let's talk about MENA. We delivered 500 units to MENA in our first order for that quarter. almost immediately they wanted another 200, which was great because that was above and beyond what it is we were going to supply them. But they will then order, as part of their contract, 500 units every quarter into the future, unless we up the number of units that they're going to order at some point in the future. Now, that was a very long-winded way of saying, as we go through the process and get more clients on board, things will, on a quarterly basis, so every 4C should be reasonably consistent and demonstrate the growth in revenues moving forward. So we're not going to get a famine or bust, right? Or the feast or famines, I should say. So that was, I should have probably just said that up front, David, and would have saved us about 20 seconds of people's lives that they'll never get back.
How should investors think about the timing and ramp up of revenue from these agreements? So from signing an agreement to shipping first order to start embedding it in their workflow, what does that timeline look like?
With regulatory approvals now in place, there is no lag time. So the moment, my goal is, as soon as we get a contract, the first tranche of cartridges will be shipped to that client that quarter. There'll be no lag time, no anything. So because part and parcel of the contractual process is for us to help them under, like when Hassan turns up, heaven forbid me do it again, that would be a big mistake. But when Hassan turns up and helps with the onboarding process, we make sure that we understand the IVF clinic partners' workflows and help them integrate Felix into the way they operate so that when we sign the contract, they start using it immediately. So that our intention is not to have any lag time. Contract revenues immediate.
At what point does the model begin to compound meaningfully, and what are the key drivers of that acceleration?
The big driver is of course, new clients. I mean, that's the fundamental driver of anything. But David, I think it's important for me to impress upon the audience, it's a recurring revenue stream. So, for instance, with MENA, that $300,000 isn't going anywhere. It's going to be there unless we screw something up. And I can't imagine how we would do that because it's part of their workflow. So there's $300,000. Now, we then sign CFA Italy, right, which was $1 million contract over 5 years, but there's another $200,000 on top of that on an annual basis. So when it comes to amortizing the revenues, every single client builds on the previous clients. And the only way we can lose business from existing clients is if, one, the product doesn't work, which it does. Two, we screw up the way that we engage with that client and disappoint them. Now, I'm not going to let that happen. But they're the only two ways, right? So really, we are in a wonderful situation where the revenue stream is recurring and it builds on previous contracts.
A question in regards to funding. I know not just yourself, but any exec doing a webinar of this nature hates talking about this question, but funding. The investors, I suppose, there's a number who are on this call are thinking, right, well, clearly going to need to raise capital because you're going to need capital to fund inventory build-up, for example. Is that the case?
I'm not going to shy away from this one. We are going to have to raise capital at some point because we're selling too much Felix. I don't need it for operating costs necessarily because we've really stripped back, and we made this announcement, we've stripped back to bare essentials without compromising commercialization. Okay, so really, we need cash to be able to fund the 1,000 cartridges that I need made every week to try and meet demand. Just to repeat that, we are working with our current manufacturers to manufacture, because that's all I can do, 1,000 cartridges a week to meet demand that I know is already here and is already coming. Right? So that's a pretty nice position to be in, right? So we are really ratcheting up the scaling of operations to be able to meet the demand that is here already, but is already coming, but will be coming, sorry.
So just on that, obviously I suppose the obvious answer to how you get funding, which I'm seeing coming through on the comments and questions, is cap raising, cap raising, cap raising. Is that necessarily the way that the company may look to raise the funds it needs in the short term?
Look, the answer to that question is no. There are many ways of raising money. You can debt fund things. I can fund on open orders. I can fund using, obviously, shareholder equity. So as a board, we will assess what's best to drive shareholder value. One thing that I'm very, very cognizant of is where the money comes from. Because I'm a shareholder as well. I put my money in the organization. So I want to make sure that whatever we do, we're driving value for our shareholders on the back of the delivery of the value proposition to our clients. So every step of the way, we will be looking at what is best for the organization at that point in time. So cap raise is not our own, this is not the only arrow in my quiver, right? So we've got options, and all of those options will be investigated moving forward. And a lot of those will also be relevant to different times in the organization's evolution as it moves forward.
The question here about the US market, keep in mind you've got a fair bit on your plate already. Is the US market a focus? And if it is the way to enter that market by you having a partner, bringing in a partner who would partly or fully fund enter into that market, the FDA process, etc.?
Really good question. The US, we don't have the luxury of diluting a single solitary resource from Europe, MENA, and ANZ. We just don't. There's 2 million cycles there in the graph that I put up previously. The FDA it'd be a de novo, so it's a brand new FDA submission. Those things take between 2 and 3 years to get through the process. Cost about $1 million US, and require resource to be able to manage that. Now, the board's made a decision that's not something we'll be focusing on because there's too much to be had in low-lying fruit in Europe. That said, we are talking to people that might be interested in looking at taking the FDA and the Americas and moving that forward. They are very early stage discussions, so I'm not going to say we're advanced, but the point you raised, David, is very real. If we can find a partner that really understands the necessity to engage with IVF clinics and sell what it is we do for a living in terms of Felix, very open to those sorts of agreements in that part of the world, a licensing agreement, for want of a better term. Now, as I said, we've started some discussions with some interested parties, but they're very, very early stage.
Question here, which may be a little bit early. There's another couple of questions, but we'll jump into this one first. M&A.
Yep.
You're starting to get traction, clearly disrupting the market in terms of the ability to get into workflow. And like I said, it may be a bit early, but I've got the question here, so I will ask every question that comes through where I can.
Yeah, thanks for that, David.
Are you on the radar? Are you being looked at? Are you being watched?
Yes.
Nothing more than that.
It would be wrong for me to elaborate anything more than that because it is early days. And let's face it, although I'm really pleased with the revenues that we're generating at the moment, there's a lot of work that still needs to be done to ensure that the scalability and reproducibility of our business model actually is there to be seen for everyone. So the short answer is yes, we are. But is it a short-term thing? No, it's not. And my goal, really, my sole purpose in life with the team is to make sure that we have a business model that works and generates revenues with the ultimate goal of being a self-sustained organization to the previously questioned, David, so that I don't have to go back to the shareholders and ask for any more money at some point in the not too distant future, I would hope. That's my goal, and that makes us a very attractive item to look at.
Question here about convertible note. Obviously, it's been in with the company for some time and clearly a very supportive provider of the note, having renewed, extended, pushed back a number of times. Is that something that is also a focus of the company to be resolved? And what steps do you think are needed to resolve it?
The answer to that question again is we are working with the holder of the note to work out how we can address the situation to the betterment of all shareholders. So you're absolutely right. The note holder, everyone knows who it is, has been very supportive of the organisation, has a large shareholding in the organisation, and has a vested interest in making sure that the organisation succeeds.
And just on that, is success going to play a role in resolving that situation?
That's well, yeah, the short answer is yes. I mean, success plays a role in everything we've just discussed, right? If there is no success, well, then we're all going to be in a rather difficult position, right? So irrespective of what the issue is, success breeds success. Me being able to provide a 4C in June that's better than the 4C in March, and one in September that's better than June, and maybe get to a place where I can start saying, hey, listen, I can see the light at the end of the tunnel when it comes to cash flow break even. And I can turn around and say, we now have 100 clients across the globe. Average cycle size is about 1,000. It's 100,000 cycles. You do the numbers. And they are not, remembering there's 6,500 clinics across the globe. And in the markets where we operate, there is well over 4,000. I don't need a lot of them. 1% is 40, so I need 2.5% to get 100,000 cycles at somewhere between $80 and $150 a cycle. I'll get my calculator out. I don't need
I want you to give any projections or
nothing at all. So there's no projections whatsoever, but you can see how quickly that recurring revenue stream built.
Okay, final question. We did have a few more, and we've tried to get through as many as we can. I've thrown all the hard ones at you. I've given you everything that's come through, and what we haven't done, we'll deal with separately after the webinar. Last question. If we're sitting here in 12 months' time, and I don't want you to give a forecast, what does success look like for the business?
Success for me would be delivering on the things that I've just said we would do today. We will have multiple clients across mainland Europe. We will have clients in the UK. We will continue to have multiple clients in MENA. We will have multiple clients in India and Asia Pac, and have some significant clients in ANZ. And they will be embedding Felix as their new standard in sperm separation. So there won't be any pilots. We'll be getting continual repeat orders from those clients as well. So for me, broadening the number of clients we've got in established markets and making sure that they are reordering Felix on a regular basis to meet the demand that they've got. And for me to be in a position to use something that I can use to demonstrate to the shareholders how many Felixes are being used every single day and how many cycles across the globe. That's what I want to see. I don't know how I'm going to get that information at the moment, apart from estimating it, but they're the sorts of things that we need to get our heads around to take us to the next level of sophistication when it comes to us understanding not just how much stuff I'm pushing out, but how much of it's actually being used. So that was pretty nondescript way of saying how successful we're going to be, David.
Thanks, Marjan. Great presentation. I threw everything at you. You answered them admirably. So thank you for participating, Marjan, and for the presentation and the Q&A.
Thank you, and thank you all very much. And ladies and gentlemen, thank you very much for your time.
And on that note, thanks everyone for joining. The focus for Memphasys is clearly now on commercial execution and scaling recurring revenue. We appreciate your time today and look forward to keeping you updated. Thanks everyone and have a great day.
Thank you.